All right, yo, what's going on? It's your boy Chark Investing back here with another YouTube video where we're talking about daily NQ and ES reviews, as well as going over, right, what we saw today in terms of ICT 22 model, right? That is the flagship trading model on this particular channel, as well as discover what the theme of today is going to be in terms of what we're talking about, right? So today was a pretty large range day where we had a pretty large intraday reversal. Okay, so that's pretty much what we're going to be talking today about as we go over the daily review. But we're going to be keeping in mind, how do you not whenever we're going these daily reviews, I don't want us to just understand what's happening on the daily, but I want us to also dial in and see what were the trading opportunities, where could we have executed to make money today. Okay, and I'm going to show you those particular entries that you guys could have taken. And things that I called out on my Discord, earlier today. So keep in mind, I also do have a free Discord. So that link is below. Feel free to join that. I talk about bias every single morning and what you should be targeting, and potential 22 models that show up. And just in case you're wondering what the 22 model is, it's a particular type of entry style, trading entry strategy, and it's coined by ICT. In fact, he said this strategy is just so easy on the eyes that it's the one strategy he would teach his daughter if she ever got into trading. Okay, so just keep that in mind. I'll go over what that strategy is. If you like what you're hearing so far, press the like button. And if you're a good person, press the like button. And maybe just press the like button just because I asked, and that's just I said please. So, just do it. And then press the subscribe button and also press the notification bell so you don't miss a single daily review. All right. I'm not going to try and keep these too long. I'm trying to keep these pretty short. Let's get right into it. All right. So first, we're going to understand what's happening on the daily time frame. Then go to the 4 hour, 1 hour, 15-minute, 5, and 1. And then that will help inform, particular trade entries that we got into throughout the day, because that is, how you determine your bias, right? Let's also keep in mind what the IC22 model is, just in case you don't know what it is, right? If you do know what it is, skip the video or skip this part. So IC22 model, let's go down to a smaller time frame here, is when you have a high, low, higher high, right? Breaks market structure above this high, and then comes back down into a fair value gap, and then goes higher from there, right? Sorry for the squiggly lines, right? And you could have some, downtrends going this way, and then price breaks market structure above this high after going down for a while, and then it shows some displacement, right, after purging liquidity by presenting a fair value gap that price retraces into, and then it continues to expand away. You can also have, an uptrend where price takes out a short-term low and then continues to make that 22 model on the way towards your final target. So that's the 22 model. If that was a little confusing, it's a little fast. One, I have a longer video on this. At the end of the video, you'll see that attached to this video, so stay around. And then two, I also will be showing you exact, examples of this on the chart, where you can use this, how to get into it, where to set your stop loss, and where to take profit and everything. Okay. Without further ado, let's get right into it. So let's start with the daily, because it's important to understand what's going on in the daily so that you can understand and develop a bias, right? And a bias is basically where you think price is going to draw to, right? There's no point in taking the 22 model, right? Listen to me very carefully. There's no point in taking a 22 model if you have no idea where price is going. You need to understand where price is going first. Otherwise, you're just trading blind. You're gambling. All right? Let's not go gambling, okay? Now, here's daily CIBI, all right? This is a daily FBG, right? That was created after we took out this low. So what do we teach on this channel? ERL, external range liquidity into internal range liquidity. What's external range liquidity? Goodness. When you take out price, when you take out a certain low or a high, right? You take out a low or a high. So this is a low, right? 1, 2, 3 candles. This candle is short, is closing lower than this high, this low and this low. So this makes this, a low right here. This is a low. Price takes out that low, aka purging liquidity. Once you have an external range liquidity taken, what are we looking for next? Is to draw on liquidity on a higher time frame. Internal range, which is this fair value gap. So that was my bias. Especially we're in the top of this weekly CIBI, right? We closed on the upper half of this weekly inverted fair value gap. That's over here to the left. This is a daily time frame, so you can't see it, but this is a weekly inverted fair value gap. You see we closed in the upper half of it. What did I say? If you're closing the upper half of a PD array on this channel, if you close in the upper half of a PD array, right, price will likely to be supported on that. Especially if you're closing on the upper half of it and it's respecting it and it's going away, that's going to be bullish in this case because they're in the upper half of it. So price is in the upper half of this weekly fair value gap, we take out this external range liquidity, and then we draw back into this fair value gap, which is the internal range liquidity. Internal range liquidity is our fair value gaps. These are gaps, right, that price returns back to after purging, an external range liquidity. So that was the draw on the higher time frame on daily. And those series need to get filled. So that's pretty much what I was aiming for today as some final targets, and we did end up getting there. One thing I want to keep in mind as well, look at this large candle. I taught this a couple weeks ago, right? If you guys have been around, you've been watching the series for a while. Look at this candle's high and this candle's low. How could I have known that today was going to be an expansion day, or a day where we got an expansion, right? Or where we could see an intraday reversal? Is one, because this day right here, which was Monday, did not take out Friday's low or high, right? So this is what we call volatility filter. So the next candle after it typically will expand and take out either the high or the low, or it'll consolidate for a while, for a couple days, right? But we saw that, so that means one of two things. When you're coming in, you're thinking, okay, we can either expand. So if I see some large candles printing as we open, I'm anticipating that we're gonna have an expansive day, right, in either direction. And then if you don't see those kind of candles and you just see we're gyrating in one place, it's probably because we're going to consolidate for a couple days, right? Where we're not taking out this previous day's high or low. So we do take out Monday's previous day low and the previous day low on Friday, and we come back into the range. Once we start coming back into the range, that's why it's important to have like a layout where you're looking at higher time frames at all times, right? I'll show you guys something right now. I always have this particular window on my second screen where I'm looking at the daily. I'm looking at the daily, looking at the 4 hour, looking at the 1 hour. And the reason why I'm doing that is because I'm starting to see that this candle is wicking back in to the range, right? And so I'm thinking that price is probably getting ready to come back up to this daily CIBI, especially the more energy it comes up, right? So you want to have that on your charts at all times as well. So I see that happening. Okay, let's try and keep it above 50 and mad quit. On the 4 hour, what do we get? So overnight, we are expecting, look at this real interestingly, right? We are closing in the bottom half of this 4 hour wick, right? Which is really a rejection block because it took out this high. It's a rejection block. Price is closing in the lower half of it. Look at how we close in the lower half of it and we start to expand away. What did I just say? The opposite remains true. When you're respecting the lower half of a PD array, right, price starts to move away from it, we can expand in the opposite direction. So we are expanding lower, taking out this low, the previous day low, and previous day low from Friday as well. It's also the previous week low, actually, because that's Friday's low made that previous week low. So now we've taken out a lot of liquidity, revisit this 4 hour fair value gap that we and completely fill it in, right? So this is called order pairing. There's a low, that's liquidity, right above the complete filling of this fair value gap. So we're going to fill this inefficiency and also take out orders for people who had sell stops or people who had, was that buy stop or sell stop? Sell stops below here, right? And so price then comes back into the range, leaves this big wick candle going into 10 a.m. I'm now thinking that, yeah, we are bullish for the rest of the session. And that's why I said it's good to have these 4 hour, 1 hour, candles on your chart that you're looking at in a separate screen, just so that you have that market context while you're trading intraday. Because you may be thinking, oh, we're falling, but then on the 4 hour, it's like we close like with this big wick rejection block after taking out this liquidity. Yeah, I'm thinking that we're going to be bullish for the morning. Price then expands and then comes back into this 4 hour CIBI, taking out this high as well, and coming into the daily CIBI and taking out the previous day high as well. What do we have on the 1 hour? So on the 1 hour, pretty interesting, right? So we took out all this liquidity as well. What do we have now? We have all these relatively equal highs right here, right here, right, and right here. Relatively equal highs. When we've purged out all this liquidity, and there's just really easy resting low liquidity above here, I'm thinking, yeah, this is now going to be my bias for the rest of the session, right? This is the London high, this is the Asian high right here. Those have been left intact, but we've taken out Asian lows, we've taken out London lows, right? We've taken out all this liquidity over here. Where are the areas that have been left smooth, right? These areas are already made jagged. This area is now smooth where there's a lot of liquidity. So coming into the morning, I'm thinking this is exactly where we're going to take out. Plus, it has this daily CIBI above here and that 4 hour CIBI as well. And we've taken out the previous week low and previous day low. Plus we have this large candle that comes back into the range, right? Going into 9 a.m. Creates this 1 hour fair value gap. And then we leave that open. We just continue to go higher, even though we took out the London high. I would love to see in a retracement back into this fair value gap. Maybe create a 22 model on the 5 minute or a 1 minute and then continue higher. We didn't get that. Price was just really bullish. Kept going higher, right? And then we ended up taking out that high. And then by 1 p.m., you can see that once we've taken out all these objectives, if we're not showing a strong willingness to reverse back into the range, come fill some of these inefficiencies here. And look, these are some really, really balanced price range, really balanced price ranges here. That's actually this is actually an RDRB. Oh, this is a balanced price range because you have this wick and the candle rolls over it again with this large bullish candle. There's a lot of movement in here already that can keep pricing coming back down to this fair value gap. So price just continues to expand. And then if we're not showing like a willingness to come back into the range, right, and we're just consolidating, then especially after hitting all your targets, so that's why when you've hit all your targets for the day and you see all the obvious targets are gone, like you need to see some really clean, obvious price action for you to want to take your next trade, right? Otherwise, you should be done for the day. I think there was a 4 hour fair value gap that formed here, yeah, but that was by like 6 o'clock, right? So there was no 4 hour fair value gap until price had already closed. And so price does not show willingness to come back into the range. You see where it's supporting the top half of this 4 hour wick that we had before, as well as this 1 hour wick over here. Coming into that, we're finding support on that, and price just cannot show any willingness to go lower. See what's happening on the 15 minute. Try not to keep these too long. All right, so we take out these lows right here on the 15 minute, right? We leave London and Asian highs, right? So we've hit our, like, this is a classic AM intraday reversal pattern, right? Where you see London and Asian and a lot of liquidity as above here. And then by the time we get into the AM session, especially around 10 o'clock or so, you can start to see that reversal. Price has hit all of its higher time frame targets, right? Below here, and filled that entire 4 hour BISI. This right here, if you're wondering, is the opening range gap from last Wednesday, the Wednesday from last week, or I believe about 2 weeks ago. This is an opening range gap from about 2 weeks ago, actually. Wednesday that had not been completely filled yet. You can see it's still not filled here on a little part, but that's okay. Price does not show a willingness to completely fill that in. It completely filled the 4 hour BISI right here, and that's fine. Found some support on the consequent encroachment of that, right? In the upper half, only closing in the upper half. Price rallies higher, returns back to the opening range gap. Oh, sorry. Yeah, the consequent encroachment of today's opening range gap, right? Which is the, if you're wondering what an opening range gap is, it's the difference between the close at 4:59 and the 9:30 a.m. open on your RTH charts. That is a gap that would typically get filled 30%, 70% of the time within the first 30 minutes of the trading session. So you can see that could be a nice target on lower time frames. Where this opening range gap, the consequent encroachment gets hit, you can see that we find some support, some resistance on that, and then we go lower. We fail to get to this 15-minute fair value gap. That's okay. And that's acting as a breakaway gap. Price then wicks higher. We find some support on this wick right here, and then keep going higher, creating another bullish order block in the process. Okay. Price rallies back lower, takes out this set of LRs, takes out this set of LRs, finally gets there around 11:30. We do pull back and kick off that lunch macro a little bit. So we see, like I said yesterday as well, same thing happened. Where you see a little candle that just comes on lower time frames, taking out some rest in liquidity here, returning back into the 15-minute fair value gap. And then price, once you see this happening, a lot of times lunch can just continue. When you see a pullback at 11:30, lunch can continue. So 11:30 saw that pullback, lunch continued higher, finally towards that daily SIBI, and then back to last week Friday's opening range gap, where you can see this, we did touch that, and price has been hovering in that for a while now. I could see that if we're going to continue to be bullish, we can come and take out some of the liquidity up here, and fill out this entire Friday's opening range gap. I like to keep these opening range gaps on my charts because these are very easy targets to be looking at, right? In terms of draws and liquidity, because these are going to need to get filled. On a 5-minute, right, all this action over here is not really important, right? Because on the 5-minute pre-market, Okay, so here's another thing. So this intra reversal happened pre-market, right? Why? How could we have anticipated that price action was going to be nice? Well, first of all, it was 8:30 a.m. news, right? And so a lot of times you see 8:30 a.m. news, price can move before the 9:30 open. So if you see 8:30 news, you should be starting your trading, right? You know, like you could typically see a nice move around 8:50 or so. You can see a nice, inversion for value gap right here. We invert that, price comes back lower, continues higher. On a lower time frame, there was actually a 22 model that I could have taken if I trade before the 9:30 opening, but I was actually in the gym. And you can target these relatively equal highs here, above here, here, and back into that daily SIBI, which you could see that if you had gotten your entry, which the 22 model was around here somewhere, got your entry, you would have just gone much higher. Price just continues to go higher. It consolidates a little bit once you get to the opening range gap. Trickles higher, consolidates a little bit once you've taken out the Asian and London highs, which is very typical. Once you've taken out London and Asian highs, a lot of times you can see price consolidate for about an hour or so. You can see that we consolidate pretty much here for about 50 minutes until the next macros are, I believe. Price continues to go higher. And then we finally attacked that daily SIBI. We got there around 130. Price rams higher continuously until we get to that Friday opening range gap that was left open. Okay. Last thing here on the 1 minute, let's just go through some of the 22 models that formed today that were really nice. I'm going to go over them really quickly. So you can see once you come down here to this 4-hour for value gap, right? We had 8:30 a.m. news. Price continues to go lower. We take all that liquidity. It's leaving all these LRRs in the way, right? So you can expect a V-shaped recovery because we're coming back into this 4-hour BISI. We've taken out all these lows. We're now heading for an intraday reversal, right? Once we get to the New York Open. So price creates this low, high right here. Let's get closer. Around what time is this? Around 9 a.m. So that 8:50 to 9:10 macro, right? So when you have 8:30 a.m. news, a lot of times you can see a good trade forming between 8:50 to 9:10 a.m. So you have this low, high, gets taken out by this low, break of market structure right here. Fair value gap that we return to right here. That's your entry. Stop loss goes below. Lowest hanging fruit is this breaker. But if you want to be really aggressive, price really should not come back below this inversion for value gap. So you could have set your stop loss here. But because my take profit is so much higher, I could afford to have the risk to reward and keep my stuff over here. Because I just like to keep mine below 3 PD arrays. So you see this inversion for value gap. You see these for value gaps right here. And you see this breaker. I just feel much safer keeping it below the breaker. I like to keep mine below the breaker a lot. You could have left it below this inversion for value gap right here. But sometimes you could see like a spike through and maybe just tap this for value gap here and continue higher and close in the upper half of that. So that's why I don't like to keep my stop losses below just inversion for value gaps. I like to at least have another strong PD array in the way. Like breakers are really strong. Price goes higher. At this point, you'd be in a decent amount of profit. Take some partials once you get to the opening range gap CE. Take about half your trade off. Hold the rest until you get to the London and Asian highs. You can hold a runner all the way to the daily SIBI as well. There was one other 22 model I want to show here as well. This was during lunchtime, so I would not trade it during lunch. Although this is a good 22 model, low, high, low, breaker market structure, couple for value gaps here. I'm sure this would have looked good on a 5-minute or a 2-minute. Yeah, like this is 3-minute. Look at this fair value gap right here. Low, high, low, breaker market structure, fair value gap, price comes back into it, rises higher to the daily SIBI, plus that Friday opening range gap. But I want to show you a really good trade that happened. If you missed the first one in the AM, this is another one that could have taken, but I was in a meeting, I didn't want to take this. So we have this low that gets purged out by this low. This low right here gets purged by this low. Break of market structure, fair value gap right here. And one right here. Price comes back into that fair value gap. Where's your stop loss? Stop loss can honestly be below this wick right here. Or if you want to be aggressive, could have been below this IFVG. Why? You have this really big wick in the way right here. You have these fair value gaps. And you have this IFVG. That's 3 PD arrays. Price should not return below there. You can aim for your 1 to 3. Aim for a 1 to 3. And you would have just got that. All right. So once you get halfway, take out half your trade and set your stop loss to break even. Once we go up higher and break market structure right here, once you enter and price closes above this high, you set your stop below here. Let price get to halfway, take out half your trade, hold the rest to your TP. If you want, you can hold a runner to go higher as well. And you could have done an extension here on this particular low right here. Ugh. See, price gets to about 3 times the range, in between 3.5 to 3 times of that particular Judas swing right there. What about that Judas swing that we would have entered on? Yeah, price expands pretty far away. Anyway, so you could have aimed for some standard deviations of up higher. Price was clearly very bullish today. But yeah, so this is how to anticipate, large range days, but also intraday reversals. Make sure you like the video, subscribe, and yeah, subscribe and press comment button, and comment what do you want to learn below. And peace and love, guys. See you next video.